In the midst of market fluctuations, Coinbase CEO forecasts an astronomical future for Bitcoin, envisioning its value soaring to $5 trillion. With gold hitting record highs amidst inflation concerns, Bitcoin's potential as a digital gold of the future is drawing attention. Stay tuned as the crypto landscape continues to evolve. Don't forget to subscribe, like, and share, and let's start. Is this accurate? $3.7 billion of Bitcoin shorts will be liquidated at $72,000. If so, I wonder what that will do to the price. Also, Bitcoin weekly close potentially can close extremely bullish, and we can see that on the chart. We are breaking the 70,000 soon and going for 72,000, and maybe the new highs will be reached. Gold is closing in on $16 trillion market cap as it sets a new all-time high of $2,330, which means Bitcoin will be worth well over $750,000 when Bitcoin flips gold. Think that sounds crazy? Larry Fink does not. He has already been on TV pushing Bitcoin as a digital gold in a flight to quality, and his army of salespeople will turn the digital gold meme into reality as they push Bitcoin into every investment portfolio over the coming years. If gold is at $15.8 trillion and rising, at 750,000 Bitcoin shouldn't surprise you at all, and both are the bearer assets without the counterparty risk. Both are primarily used to store value over the long time period, but gold inflates at 2% a year, while Bitcoin is finite. Gold production increases if the gold prices spike, and Bitcoin production cannot increase. Gold cannot be sent over the internet, as Bitcoin can be sent to someone on the other side of the world in an instant. Gold needs to be melted down to verify. Bitcoin can be verified by anyone with a computer. Gold is impractical to divide, and Bitcoin can be easily bought and sold in arbitrary amounts. Gold only beats Bitcoin if all power internet go down, in which case we have more important things to worry about. Sure, gold can potentially be considered a hedge to Bitcoin somehow, failing in some unforeseen way, which is the only reason I still own some physical gold despite watching it rapidly lose value in Bitcoin terms. But Bitcoin is an improvement on gold in the same way that the internet is an improvement on the telegraph, and it's step change in humanity's ability to store value long term. A solution to one of the most important problems facing every productive human: how to protect your hard-earned savings from debasement and ensure your future prosperity. Overtaking gold's market cap is ultimately just a stepping stone in Bitcoin's journey. There are still hundreds of trillions of dollars of value stored in the debt of the profligate bankrupt government and overvalued equities. Much of that value will be inevitably find its way into the Bitcoin over the coming years, and you may think $69,000 Bitcoin sounds expensive, but one day we will look at a sub $1 million Bitcoin with nostalgia, and it will seem as far away as dial-up internet and flip phones do to us today. The next one we're going for is that Bitcoin breakout happened a bit faster than expected, and the rocket did not even have a chance to get out of that way. What's next is the Big Sunday report, all you need to know, technical analysis of psychological analysis, and the rest. What a crazy week it has been once again. Last week we discussed the possibility of touching the CME gap, and indeed Bitcoin dumped 10% from 71,000 to 64,000, exactly as we mentioned in last Sunday's report. Since then, Bitcoin has started moving upwards. So what are the next targets and what can we expect next? First of all, people need to understand that we are in a massive sideways movement in an absolute big time frame. This range goes from 58,000 to 72,000, as we have been moving within this range for many weeks already, but as mentioned in last Sunday's report, it's only a matter of time before we see a breakout, and in the meantime, during this sideways movement, we have seen significant on-chain movement from whales. For example, whales buying while the smaller players and retailers were selling, and at the same time, highly important, tons of new USDT was printed in the last few weeks, as Bitcoin's all-time high of 72,000 was reached when the USDT market cap was at $102 billion. Now with $107 billion market cap, Bitcoin should be higher than 72,000 under normal market conditions. However, the price is surprisingly lower, as this tells me that Bitcoin is currently fairly valued in terms of total money circulation. as the market makers and big players are preparing for the next big upside move. This is, and the tons of arguments I've given you in the last few Sunday reports should tell you one thing: the super cycle is loading, and the mother of all pumps has not even been witnessed yet. Again and again, I can only remind you of what I said in the last Sunday report. Don't get outplayed by the market makers who want to buy your bags from you. It's just a matter of time, and the mother of all the bull markets is loading. I expect to see a new all-time high in the next few weeks, as targets at 74,000 are imminent and only a matter of time. This is exactly what I've been saying since 62,000, since the CME gap, and the price will go up, and we will continue to rise towards the region of 74,000, as let's see how the market will react there. In terms of calendar, it will be a very volatile week, as we have CPI reports on Wednesday with 3.4% forecasts, and also on Thursday we have PPI reports including unemployment claims and European ECB price conference, which will most likely react to the US CPI numbers and give insights about the future rate hike, increase or decrease. As many large exchanges start to KYC, it's hard to find non-KYC exchanges. Just partnered with Blowfin where no KYC is needed as long, so that's kind of what we have, but we are going for more. What do we have there? It's just 12 days until the Bitcoin halving. We are counting down with 1836 blocks left, each taking about 10 minutes. The anticipation is building. Bitcoin could attract a new subset of investors as digital gold, says Coinbase analyst. Gold surges to new highs as inflation fears escalate and central banks ramp up buying. In contrast, crypto slams after the Federal Reserve shows a cautious approach to rate cuts, as Coinbase analyst David Hunt sees this environment as an opportunity for Bitcoin, suggesting its growing acceptance as digital gold could attract a new subset of investors. Deeps are likely to be more aggressively bought compared to previous cycles, even as volatility persists during the price discovery, Han stated in a report published on Friday. Additionally, Han noted that easier access through the US spot Bitcoin exchange traded funds could bring in more institutional capital, potentially reducing volatility. Han added two positive signs for Bitcoin: increased institutional involvement and upcoming Bitcoin halving. CME Bitcoin futures open interest at $10 billion as now surpasses that of any single centralized exchange and represents a significant portion of the total Bitcoin futures market. This shift, along with anticipated Bitcoin halving around the April 2021, is viewed positively for Q2. In our view, the capital unlocked by the ETF perhaps represents the most fundamental shift in the market structure between the previous 2020 cycle and 2021 cycle and today. There's capital unlocks coupled with the upcoming Bitcoin halving estimated to occur on April 20th, 21st, subject to variation in network hash rate, and other positive catalysts make us still largely constructive in our view throughout the Q2, Han wrote. So that's kind of all the information we got on today's video on the Bitcoin, and if you are interested in more, don't forget to subscribe, like and share. See you in the next one, and peace.